Hey guys, welcome back to the channel. In this video, I'm going to be talking about some of the national insurance changes, particularly that affect your pension, that has currently been reported on the news. When I was looking at it earlier today, it was really unclear as to what they were actually talking about. And it actually took me reading about 3 or 4 different articles to really understand it. And I'm going to be breaking down what I found in the video in those articles to you guys, so you can very quickly understand what took me quite a while to do. So, didn't know this, but currently, when you deposit money into your pension for your salary sacrifice schemes, your company the government doesn't actually charge you as an individual national insurance on those contributions, which is typically about 2%. So, for example, if you were sacrificing about £25,000 from say £125,000 salary, there's many reasons why you do that. There's a lot of benefits that you get if you stay below that $100,000 barrier. You would pay nothing in NI contributions, and also more importantly, your company wouldn't pay anything as well. Now, as a result of the last budget, employer NI has actually risen to about 15%. So in these new changes that they're planning to make, your employer is going to pay 15% national insurance contributions on those pension contributions, national insurance on those pension contributions. So what that basically means is that if you're trying to deposit about $100 or £100 into your pension, your employer is going to have to pay £15 out of their own pocket to allow you to do that. Now, if you go back into the previous example that I gave, where if you're on £125,000, £130,000, you're trying to get below 100,000, and you're trying to sacrifice that into your pension, your employer is now going to be paying about £3,500 more for a £25,000 salary sacrifice from you. In addition to that, you're going to be paying about £360 for those contributions. So that means that in that general activity that you are doing every single year, the government is now going to take about £4,000 away from you trying to do that. Now, why is that important? That's important for a number of reasons. One, I think it kind of validifies what I've been saying recently, that they're going to try and classify that working people aren't people who are in the city or in the southeast or who earn over a certain amount. Because quite frankly, this doesn't really affect people who are on average incomes. So if you're on an average income, you're probably depositing about 5, 6, 7%. You know, you're paying an extra £30, £40 at most for the year, and your company's paying roughly about the same. So because you actually get like an allowance of about £2,000 to do it tax-free. So it doesn't affect a lot of people. It affects people who are young professionals, etc., who are saving for their pension, which, funnily enough, is kind of interesting because you'd think that they'd want people to do this given the state of the triple lock and how much it's going to cost people who are in their 30s or 40s now, how much it's actually going to cost for the government to keep the triple lock for the next 20 to 30 years or so. But that's a topic for another day. Now, what do you think happens to that? What I think happens is that companies are naturally going to be less generous in what they're willing to match. They're going to probably take this away from salary rises or other benefits that you get as an employee. And ultimately, whichever way you cut it, whether you're paying it directly or the company is removing benefits from you to be able to pay the government, this is a tax on income. This is a tax on saving. This is a tax on anyone that really wants to be prudent and prepare for their future. It just seems to be quite silly, but that's what they seem to be focused on. Another thing as well is Rachel Reeves confirmed for the first time in an interview with Andrew Marr that she's not being specific in what taxes exactly are being raised, but that tax raises will happen, and that again, kind of goes back to my earlier point that those with the broadest shoulders should bear the brunt of these tax rises. Now, it's really difficult to tax millionaires and billionaires. They don't really, their income isn't readily available. They can move it, they can reclassify it in a different way. And that's a whole nother topic. It's a lot easier to tax middle class PAYE employees who really have nowhere to go. However, my concern is that they don't realize that some of these people are some of the most upwardly mobile people in the country who could probably move to Dubai or Milan or Paris or Singapore or Hong Kong. I know a lot of people who used to work in London and don't anymore, and in some cases took those jobs with them to go do them elsewhere. And even if you have a very, very, very small minority of these people who contribute the lion's share of our income taxes leave and go elsewhere, it could have devastating knock-on effects for how much the government is actually able to raise through income taxes, and then inevitably have to raise income taxes again, which leads to more and more people leaving. And it just kind of becomes this death spiral where you're just getting rid of the most ambitious and most energetic and knowledgeable professionals in your country, because that's literally what's going to happen. Well, look, these are still rumors. It hasn't come in yet, but I think given what I've seen, I think it's almost guaranteed that it's going to be in the budget. So I hope that was helpful. I'm going to be releasing videos on a regular basis on what's going to be happening in the budget and what to look out for. Give me a follow. I guarantee you every single video I put out is going to be full of value. So check it out. Bye-bye.